All right. Perfect. Hey there, everybody. Good morning, good afternoon, good evening, depending on where some of you guys are at. I hope you are all having a good Monday and had a safe and wonderful weekend. Um, as always, we'll get started here with SPX, talk about what the market's doing, talk about a potential game plan for the week, and then we will, of course, go on from there. Hey, Zane, good to see you. Good morning, baby bear. You as well. Hope you're having a good day so far. So let's pull up the chart here and we'll get started. Hey, Bobby the noob, good to see you. Hope you had a good weekend. So let's just make that chart bigger. There we go. So SPX overall, we opened technically a little bit higher this morning, went up to 4140. For those of you who have been following along with me since last week, y'all know that that has been actually, the last couple of weeks, that's been a price resistance level as we've remained in this overall chop on the daily chart. Once again, ended up holding. We dropped back down towards support levels, got close to 4125, which is a mini psychological level for those of you who don't know, especially on the S&P and on the bigger indexes and names, the big round numbers like 4,000, 4,100, 4,200, those are really big psychological levels. And then the 50s, right? So like 4150, 4250 are also levels that are respected but from an intraday perspective, the 25-point increments are ones to be mindful of. So in SPX in particular, 4125, 4175 are going to be levels where it's not uncommon to see the price at the very least stall there and maybe take a pause before it breaks it, or it could potentially act as price support and price resistance. So we see that this morning with the low today coming in just slightly above 4125. So that psychological level held. And now we're attempting to get a bounce back up. And overall, from an intraday chart perspective, if I were to choose a bit more of a direction today, I would be leaning more towards the upside. And there are a few reasons why. One, from an hourly chart perspective, which is this grid over here on the far right, you can see that we came down and tested the 100 period simple and held that as support this morning, just like we did back here whenever we first managed to cross above it. So the fact that we pulled back down, tested it, and it's holding is usually a good sign that we'll at least stall there while continuing to maintain that level or potentially bounce off it to try and keep going in the chart pattern. The reason why I think that bounce could occur today is because we have momentum crossing above the zero line on the hourly chart, and there is still room to the upside, as you can see when I zoom out. We have a bullish signal here on the compound breakout tool, so that looks pretty good as well. Bollinger Bands are not flaring open, right? So I wouldn't necessarily anticipate maybe a strong move to the upside today, but they are still pointed more to the upside. So they're still anticipating that overall grind higher, which of course we need to be mindful of as traders. On our smaller time frames, we have bullish signals on the compound breakout tool as well. Momentum either had a great reset, like we see here on the 10-minute chart, and is now starting to show some green bars. So that's usually a bullish trend signal that it could reverse and go back up. And on the 5-minute chart, momentum's resetting. If we do start to see those green bars cross above the zero line, that will add to the bullish strength of the trend and continue that to move higher. Now, of course, do need to be mindful on the 5-minute chart, right by that 4140 level I mentioned, which has been a price level recently. We see the ATR trailing stop. And then slightly above that at 4145 is the ATR trailing stop on the 10-minute chart. And of course, right above that is that psychological level we just talked about at 4150. We can see that held the highs from Friday whenever we traded there, and it held the highs back here from Wednesday before we had that drop back to the downside. So even though I do think we have a bit more of a bullish trend today, right? You can hear the sigh because I'd love to see this turn directional. I think we still need to be very aware of overall chop and consolidation, unfortunately. So, the reason why that is because of this daily chart, as we can see here. Now, for those of you who are following along with the Fed news, we did end up getting that volatility the day of the announcement, right? And we saw those bigger daily ranges going a bit more into the end of the week and right before the announcement. So we saw the daily ranges kind of pick up, but it's Very similar to what we saw in the last Fed news, which is even though the daily ranges had those volatility the day of, we're not getting much else, unfortunately. We are still stuck in overall consolidation. And there's a lot of indicators pointing to that right now. The first one is the Bollinger Bands. Those are relatively flat. So they're not really anticipating a strong move up at this point, but they're not really anticipating a strong move down or break of support either. Momentum is still in the process of resetting towards the zero line. So as we know, it's not always off exhaustion levels. This wasn't near necessarily bullish exhaustion. But what ends up happening is as we start to go back down towards this red horizontal line, which is what we call the zero line, whether it's from a bearish perspective and we're moving back up or a bullish perspective and we're moving back down, overall, that move back towards that neutral level is basically a sign of either a pullback or consolidation. And when you don't necessarily need the price to drop down in order for that to reset, a lot of times it just consolidates and that allows momentum to reset before the next leg gets going. And so, unfortunately, that's what we're still in, right? We are getting as close as we can to that zero line and kind of hugging that level. So, that's still in line with the choppy pattern that we see here. On the compound breakout tool, we had a slight pullback signal here. We pulled back basically right into price support, which was right around 40.50. Remember that psychological level we talked about? That ended up holding us support. And then we are bouncing back up. The pullback signal on the compound breakout tool canceled out, but it hasn't given us a bullish one yet either. So, because it's only just the one box right now and we canceled the prior signal, it is still also more a consolidating signal at this point. And then we have a very nice squeeze building up into play. And so for squeezes to start to build that energy into them, it's not uncommon to get that during consolidation either. So all of these are clues that we are stuck in chop. Now, from a moving average perspective, we're still technically more on the bullish side. Our 10 period simple, which is this short dashed line, is still above the 30, and both are still above the 100. So that adds a little bit of strength. The fact today that even though, I mean, I don't know how much of a day trading range you'd call this. We've only moved less than 14 points today, right? $13.69 is all we've moved. So unless we can kind of get going here, it's not much of a pullback. But for what we do have for the lows, they are still holding the 10 and 30 as support. So if we do manage to bounce up, that could allow the 10 period simple to start rolling off the 30 and then continue in a bullish trend. The issue that the price has really getting going to the upside right now is still from that weekly chart, right? So we've talked about this in here plenty of times. But on the weekly time frame, even though our lower indicators are pointing more towards the bullish side at this point, we are struggling to break above the 100 period simple, right? This solid orange gold line. The ATR trailing stop above that, which is at 42.60. And though the Bollinger Bands had started to open up, we talked about this actually last time back here, where sometimes the Bollinger Bands will make room for the price to stay within that second deviation Bollinger Band, which is this inside blue line. So stay within the comfort zone. But what ends up happening, hey, Claude, good to see you this morning. But what ends up happening is basically that's all it does is it opens up a little bit. The price is able to test support or resistance. And then as soon as it does, the Bollinger Bands immediately flatten back out because they're not anticipating a break of that level, at least not at that time. And so that's kind of what happened back here. We started to see the Bollinger Bands open up. We were like, oh, maybe the Fed news could be a positive catalyst for the market and really get things going to the upside. But then what happened? We went right up towards 4,200. We tested it, and the Bollinger Bands are immediately flattening back out. Now, if the price can really put some pressure on that 4,200 level or maybe start to break it, then we might see those Bollinger Bands open up a bit more. And if that's the case, that could give us finally that possibility of breaking weekly resistance and trying to go back into a bullish trend again. But until that happens, as you can see right now, weekly chart is still very much in consolidation. The 10 is in between the 130. The Bollinger Bands are still flat. So unless we can get some strength going here, if anything, we're just still at this point building energy into this weekly squeeze too. And I know we talked about this in here, I believe, last time, but the concern is, especially now that the Fed's already happened and we can see it was unfortunately not really much of a market event because we couldn't get going to the upside and we couldn't get going necessarily to the downside. We just hung out in the same range. We could be entering a year, maybe even 2 years, right? For what we saw back in 2015, 2016, which is consolidation, where we don't really get the price to move up strongly, right? To give us those gains in the overall market, but we don't really see the price dropping down drastically either. It just takes a breather. And so if that's the case, then we'll need to look at strategies that benefit more a choppy consolidating market if you haven't already started to do so. Things like credit spreads, iron flies, iron condors, until the market tells us otherwise. Those are the strategies that usually benefit a bit more in consolidating markets. It's either that, right? Doing that on the main indexes and benefiting from the chop with that theta decay, or trying to look for those quote unquote honey badger symbols, right? The symbols that are doing what they want in this market. They don't care that the overall market's choppy. They're getting great runs to the upside or they're falling apart to the downside. And those are the ones that we can look at for more directional plays. And Bobby, I can't agree with you more. I am so tired of seeing consolidation. And I feel like this was like my last hope, right? It was like Obi-Wan Kenobi. It's like, you're my only hope, pal, at moving this market one last time, and he didn't deliver. So, because of that, we just have to switch our game plan, right? As much as I'm more a directional trader and I want to look at those directional moves up and down, if the market's not presenting it, I'm not going to throw my money at the market and basically see it disappear, right? That's the worst thing you can do because at that point, you're not trading off a trading plan anymore. You're not trading off of what the technicals are telling you. You're trading off of hope and you're trading off of emotion. And though it's always a good thing to have hope, you don't want to trade off of that because that's not really good technical, right? That's not what usually causes you to make money. If anything, that's usually what makes the money disappear from your account. You're basically just paying the market maker saying, "Hey, take my money, right? You can have it." And we want to try and grow our accounts. So because of that, those are the strategies that I will be leaning more towards at this point, until we can either break 4,200 and really start to move higher, or we actually get a stronger break of daily support down here right around 4,000, a little bit above that. And if we can really break this 4,000 level, then even if we're still in chop from a yearly perspective, which is still a good probability, we could at least see a reversal back down to the bottom of the range of this chop, which is closer to 3,800. And so that would at least give us a 200-point range to try and work our way down into and maybe play some short-term directional trades at that point. Um, and Bobby, yeah, you don't, as like I said, as much as I'm a directional trader and I'm right there with you, it hurts the P&L when you just keep forcing those styles of trades and the market's not presenting that to you whatsoever. So, like I said, this was kind of my last hope, was Powell being able to move the market because so many people were focused on potential rate cuts going into the end of the year, and he kind of was like, I don't know if that rate cuts are necessarily going to happen, but it does look like they could be pulling back on the rate hikes." And so in turn, that's what initially caused this to start to move lower. But it certainly wasn't enough of a statement to get the market to break to the downside. And so it's between that and of course Apple had beautiful earnings, which, keep in mind, I thought about this last time with Apple. The thing about Apple is they haven't given guidance for the past, like, 2 years, right? Really since, like, 2020, they have not given any sort of guidance on where they're anticipating the next quarter. Every now and then, they'll, like, slip in a little something being like, for example, this time they slipped in the fact that they're not anticipating layoffs, they're not looking to do that, which is what a lot of other companies right now are doing, right? They're on their maybe even 2nd and 3rd rounds of layoffs currently. Apple's like, no, we're not kind of doing that. But they didn't really give any sort of strong guidance or specific numbers of what they're anticipating for next quarter. And I think overall, as we can see, that's really helped on their past earnings because a lot of times we've seen other earnings come out, and if they still get good numbers, right? Maybe they still beat in some way, but they don't meet the targets that Wall Street has set for it. They end up dropping down, right? They get gaps to the downside, they get stronger pullbacks into support. Whereas Apple, because it's not really giving us specific numbers or targets on their guidance, we can see here for the last several earnings, they've actually had those stronger gaps to the upside or those runs to the upside after their earnings announcement. The last four, we've seen that happen. And so that I think also kind of helped out some with the narrative of, like, hey, we didn't necessarily not beat things because we told y'all just little things here and there. Um, but we didn't, of course, tell y'all enough to where you could be disappointed in what our numbers are. So certainly we're seeing that strength happen, right? We'll see if we can move higher here. Of course, on Apple, 175 is going to be a mini psychological level to be aware of. But that's what helped with the bounce, certainly on Friday, because Apple's such a big component of the market in general. So yeah, that's what caused us to be right back in the chop. Um, and then, Bobby's bringing up a good point. Consolidating strategy, though, I've learned that you have to wait for at least the middle of the day if you're doing 0-day expiration for SPX because the premium just decays while the underlying barely moves. And that's very true. So if we're looking at 0-day end of day strategies overall, then doing things like iron flies are usually something you want to put on a little bit earlier in the day, especially iron condors, if you want to take advantage of the consolidation. So let's just pull up our option chain here, and given the ranges that we're currently seeing, so certainly 4150 on the upside is going to be a psychological level, and we have some resistance there short term. 4125 right now seems to be a pretty good support, maybe 4120. So let's just even see if there's any premium around that range if we are to do an iron condor. So you can already see here, right? It is what, barely an hour, almost 2 hours into market open. So not that much time has passed. And we can see here on an iron condor that given the levels that we're looking at from a technical point of view to hold, we're only getting about $1.45 of credit. That is 355 of risk. That is certainly not the risk versus reward scenario that I typically look for. And that's already showing you that we've seen quite a bit of chop this morning. We haven't got much of a daily range. So what's happening is even though we had these great daily ranges last week between the Fed and Apple, because of the lack of movement so far this morning, right? In the first hour of market, you usually see some bit of movement. So the fact that we haven't really seen much of that at the start of the day means that all of the premium that's tied up, especially in these out of the money strikes, it's already disappearing, right? Theta decay is already benefiting from that going away. And so because of that, that's why we don't get maybe the best risk versus reward here. So if we did really want to go with an end of day pin trade here, we either one might want to consider bringing in our level sum, right? Try and get a little bit even of risk versus reward, or two, consider an iron fly style strategy. Now, usually, if I go about doing some sort of iron fly, so let's say we do something like this, where we're looking at 4140, that level for the pin. It's a 10-point spread. It's about a 780 credit, so a 280 risk. Not a bad risk versus reward, right? That's the risk versus reward scenario I certainly look for a bit more of, where there's a really great profit potential off of a very small amount of risk. Um, Usually, I look to put this on after Europe's market close, which is about to come. That's at 10:30. And the reason why is after Europe closes, sometimes the market will move just a little bit more, right? Usually, especially in a bit more of a volatile market, you'll see after Europe's close, it will pick up a little bit more, and then it will go into the lunch hour. And what typically happens during lunch hour, not always, because sometimes the algos do their thing. But what typically happens during the lunch hour is the big boys, right? The hedge funds, people like that, they go off for their lunch break. And so the market typically quiets down until the close and going into like the last hour, 2 hours of market, right around 1 to 2. PM Central going into market close, that's when the market can pick up again in that volatility and start getting a bit more of a trading range. So the idea here is if we did something like this with an iron fly, we want to time it to where it's after Europe's close going into the lunch hour. We benefit from that theta decay and that flatness through the lunch hour, right? Because usually, especially on a day like this, I would imagine, unless an algo trips it, that it's going to just be pretty boring overall. So it will stay flat. The theta decay will continue to work in your favor during that. And then if you have the ability to day trade where you don't fit the pattern day trading rule, or maybe if you even if you are in a small account, you still have all three of your day trades available to you, you can potentially look to day trade out of that for a quick win and not necessarily even hold it into market close and into cash settlement. That way, if the market does pick up on movement in the last hour or 2 hours of market, you don't mind that because you've already taken the profit. So you don't have that risk of it potentially getting up closer to 41.50 or maybe breaking 41.30 and going down to tag the 41.25 level again. And so that's why I would wait a little bit longer if you plan to day trade. But yes, you are correct. Usually earlier in the day, like this, is a good way to go about benefiting from that, still getting a good premium and then benefiting from that theta decay into the close. And Papillion, good to know. Papillion mentions that it is a bank holiday in the UK today. So that could also be part of the reason why, if Europe, right, part of Europe isn't getting as much movement in general, that could also be why we here are feeling that lack of movement as well. And thanks to Kudo, I appreciate that. Um, so yeah, it's very choppy today. Uh, Definitely, if I were looking for any sort of intraday trade, especially to profit recycle, I think the best way to go about that at this point would be to do a credit spread once it gets and it confirms support or resistance. So, for example, we just went up to test basically 41.40 again, and we've started to pull back off of that level. So, if we were paying a little bit closer to attention, right? If I wasn't trying to teach right now, you guys, what I'm seeing, um, the idea would have been to put on a credit spread where that's right at the money, right? So that way, if I'm putting it on right at the money, my risk versus reward's a bit more even. It's a bit more 50-50. And the idea is I'm doing that right at resistance. So if it starts to break higher, I know very quickly that it's breaking the trade idea I'm looking for, and I need to protect capital or do something else to, mitigate that potential loss that happens. Otherwise, though, if resistance continues to hold like it is, right, that was basically right by the high of the day and it's falling back down, then you could actually benefit from not only the pullback move, but the theta decay being held at resistance. So right now we're kind of just chopping because we still have these smaller time frame moving averages as support. But if we do manage to work our way down and let's say get closer to the 41.25 level and it looks like it's stalling again, right? And we're not seeing Bollinger Bands flare open or the price looking like it's going to break, that could be a time then to consider either if you're already in a call credit spread, adding a put credit spread and legging into an iron condor to play for that chop. Or if you're not in anything like me, that would be a good place to consider the put credit spread. And then similar situation. As long as it holds and it looks like it's bouncing, you're going to benefit from your short strike being out of the money and that theta decay working in your favor. And if it, starts to break instead, then it's right at your level, right? It's basically right at your entry where you jumped in at. So you shouldn't be down too much to where you could look to protect that capital quickly because it's breaking the trade narrative, right? And either profit recycling into a butterfly or just taking the trade off and walking away. And yeah, Bobby, absolutely. I'd be more than happy in a second to place in the chat an example of an iron fly. I right now, I guess given the range, I know I mentioned 41.40, but that's kind of right now acting a bit more as the high of today with the 41.25.20 level. So I guess if you're looking for a 10-point iron fly, really, given the current range that we have, 41.30 probably would make a bit more sense. Still same amount of premium. That, is the case. But let me type this out really quickly. So it'd be the May 8th. Of course, that's the weekly expiration. and you're looking at the 4140, 4130, 4130, 4120, call put, right? Because you're getting both sides of that, and it's an iron flying currently it's at a 77 credit. Example of an iron fly. And normally on iron flies, especially if you're looking to try and day trade them or something, I would on SPX stick to at least a 10-point spread because that way the theta decay is at least it's going to work in your favor a little bit more easily than if you do a 5-point spread. If you did a 5-point iron fly, yes, that risk versus reward looks beautiful, but oftentimes you're holding that trade into the last hour of market, if not into like the last 30 minutes or the close, for that theta decay to actually really pick up in your favor. Because for SPX, even on a day like today, where we've had less than a 14-point range, well, with a 14-point range, it's still easy to move up or down 5 points and to have this spread either be completely in the money or completely out of the money, which is what you don't want. A 10-point spread on like a 14-point daily range, that is going to work a bit more in your favor of theta decay because it's less likely that you're really going to break the level one way or the other. So keep that in mind, guys, if you're looking for that strategy for today. You liked the Princess Leia hairdo? Thanks so much, Hulagram. Keep that in mind for next time, certainly. Um, but so let me just review that really quickly. Overall, haven't taken a trade in the $500 challenge. I was looking at an end of the day pin last week on the Fed day. And for my mastery folks, they know I typed up the alert for a really good pin trade to try and play into the close. And I totally, by the time I finished typing it up, the market immediately started to move against me. And so I missed the entry point for what I would have done for my risk tolerance. But the pin actually worked out beautifully. So for anyone in the mastery who did catch that, right? Because we were going over it on the mic together as I was typing up that alert. Well done. It would have been a great profit for last week. If you're like me and you just barely missed the move, it's okay, right? We'll look for another trade. But for this week, for the $500 challenge account, what I'd like to do is ideally do those scans for some honey badger trades, see if there's anything that is kind of ignoring the choppiness of this market and giving us a good trend move. Because certainly I'd prefer to play the trend if I'm able to. But otherwise, I'll be looking at more non directional trades or things like standard butterflies. So, for example, on the daily chart here, right? We're getting close or to the top of the range. So let's say early this week, we go up towards the 4180, 4200 level. We test it and it stalls and it looks like it's going to reverse. Well, what we could do on Friday then is look for some sort of standard butterfly around the 4100 level with the idea that we hit resistance. Now we're going to play back down into support. And this is another great strategy where because a standard butterfly has an even spread width between the debit and credit spread, you can still benefit from the theta decay of the credit spread and really keep that risk smaller and have a really great risk versus reward scenario set up. Even if this was set for Friday's expiration, right? It would have that great risk versus reward scenario. So that way we're not risking too much capital. But if we do get the reversal that we're looking for just into support, right? Which is commonplace in chop, you move from one range into the other and then back and forth. Then that could allow us a really nice profit for the account too. So those are the two strategies that I'll kind of lean towards later this week, unless I find a really good honey badger. Otherwise, it's all about at this point playing the chop until we get proven otherwise. I was really, like I said, hoping the Fed would get us going, but it was, it basically stalled. It didn't happen. And so because that was kind of my last hope for getting the market kind of moving, it's now time to just say, okay, Allison, I'm not getting the trend I'm looking for. That's okay. We have tools in the toolbox that work in choppy market environments. Those are the ones that we need to go to now to, continue to grow our accounts, to continue to make that income. But at the same time, have strategies that actually fit the market rather than strategies that are fighting against it. So that is my time for today, guys. Thank you so much for joining me, my Twitch and YouTube people. I look forward to talking to y'all later in the week on Wednesday for that update. Otherwise, my mastery folks, I will see y'all later. Have a good one, guys.